क्या हुआ? Give it a remote दे देना मेरे को. Yeah, please start. Yeah.
Good evening, ladies and gentlemen. I am Mamta Samat, moderator for today's investor meeting. On behalf of Dentsu Creative IR and PR, I welcome and thank each one of you for joining us today for the Punjab and Sindh Bank's Q4 and FY23 analyst meeting. Today we have with us the senior management represented by Shri Swaroop Kumar Saha, Managing Director and Chief Executive Officer, Shri K.V. Raghavendra, Executive Director, Dr. Ram Jas Yadav, Executive Director, and Ms. Mahima Agarwal, Chief Financial Officer. The management will first give their opening remarks and then share the highlights of financial numbers reported in Q4 FY23 and annual year FY23. I would now like to hand over the conference to Shri Swaroop Kumar Saha, MD and CEO of Punjab and Sindh Bank, for the opening remarks. Over to you, sir.
It's on. Yeah. So, good evening, everybody, and welcome to this analyst meet in Bombay, post declaration of the results of Punjab Sindh Bank of March quarter and financial year 22-23. I'm very grateful to all of you who have spared your valuable time to be present with us today in this hall here and understand and interact on our results of Q4. The results were declared on 2nd May, and I think post the results, the presentation, the stock exchange declarations are all with you. But just to set the context of today's discussion and the analyst meet, I'd like to just go through a few of the highlights of our results so that we get into the context of the interaction. As you all know that the March 21-22 was a turnaround year for the bank, wherein we registered a profit of 1,039 crores of net profit. And we had given a guidance to the market, to all of you, that we'll try to maintain the overall profitability of 21-22. And we, at the end of March 24, we were able to finish with some good numbers. Our advance grew by 15.05%, deposit grew by 7%, the business mix was around 10% growth, our operating profit increased by 69%, net profits increased by 22%, the return on assets for Q4 was increased by 23 bips of 1.33%, the credit cost was negative, recovery upgradation was robust, gross NPA net NPA percentage was as per the guidance. These are the overall macro numbers for us. The QOQ on increment basis was also very significant. Our return on assets increased by 22 bips. Our gross NPA reduced by 179 bips. The core fee income, significant improvement of 49%. The capital adequacy ratio was at 17.10%. So we are well capitalized also. On a financial year, as I said, that we were able to maintain the profitability. In fact, we grew by 26% in net profits. Operating profit grew by 9%. The return on equity was at 176 bips. And one of the pain point of the bank regarding cost to income ratio, we were able to reduce it on a year-on-year basis to 62.95. And on a quarter basis also, it has significantly improved. The business mix, if you have already talked about, the CASA deposits increased by 6.68%, and with a deposit of total deposit growth of 7.37%. In the loan book, we feel that our diversification continues, and the percentage of RAM growth increased from 50.71% to 53.20% on a YOY basis, primarily driven by RAM growth of 20% plus. The corporate lending has also started. Now we are at 9.24% growth. These are some of the numbers on the retail segments. The advances breakup, these are infrastructure, we are at 19.14%. You must have all gone through this breakup. The important profile of NBFCs, what we like to highlight here is that total A and above portfolio of NBFCs is at 99.53%. That is nearly 100% of the portfolio is A and above, with a AAA rated portfolio of about 58.4% of the total portfolio of 13,312. The credit profile of the bank has improved significantly here also, both on quarter-on-quarter and a YOY basis. The BBB and above now composes of 56.72. And if you see the migration of the AAA rated accounts, it has moved from 23.13 to 26.27. The asset quality, we are all aware of, the PCR has improved from 87.89 to 89.06. On the segmental NPA, we find that on a YOY basis, our retail NPA has significantly moved down, still a bit high. We need to work on that. 2.91 is not a very significantly improved figure, but still, if I look into the progress trajectory, the retail has gone down, NPA has gone down by 5.09 to 2.91. Agri is okay, more or less in the industry standards. MSME also at 9.70%, with the corporate book at 7.13. The interesting fact is that on a Q4 basis also, we had a 1153 crore of recovery upgradation. And that is significantly improved from sequentially and on a YOY basis. The slippage ratio is at 0.63, credit cost is negative. SMA 1 and 2, about 5 crores, has moved down from 756 crores to 446 crores. So our collection efficiency is improved to a large extent, but still we'll continue to hammer that whatever residual stress we have. In the asset quality, of course, we had delta slippages in the Q3 to Q4 over Q3 from 243 to 248 crores, primarily for the low segment agriculture advances that we recognized in the quarter. This is in line with what happened in March 22 also, 433 crores. We have been able to recognize a large part of it. Going forward, I think this will stabilize and we have a much improved agriculture portfolio now. The overall slippages FY has grossly reduced from 2,000 crores plus to 900 crores. The significant number here is the total recovery and upgradation in the last row that you see is that last year it was 2143 crore. We were able to maintain that momentum and we had a 2,151 crore of recovery upgradation in the current financial year as well. And if you see the second last row of that, the recovery in the TW accounts has moved also positively from 338 crores to 536 crores. These are my operating net profit numbers. Net interest income for the variation for a year was at 12.10. We lost out in the YOY variations for the quarter, and that was primarily due to the interest reversal that happened for the agriculture accounts that we recognized. Otherwise, we feel that it is a one-off matter, one-off quarter, and in the going forward, we should be able to control things in a much better way. The core fee income has increased on a YOY basis by 10% and on a yearly basis at 8.9%. The treasury income, as you all know, was muted this year, but we hope that this year it was muted last year, and we hope that this year the treasury income will be in a much better way. The way the yields are moving, we can hope that we'll be in a treasury will be much more contributing to the overall performance of the bank in the current year. These are my numbers on expenses. My provisions, yes, our provisions overall has gone down from 229 crores to 137 crores, and that resulted in a net profit of 1,313 crores. We are very much focused on our tie-ups. The core fee income quarterly on a QOQ has gone by 49%, And the new partnerships that we are now having of SBI cards for credit card, the Bajaj Alliance for LIC business, health with Aditya Birla, and with the existing partners of SBI Life and LIC, we feel that this year, 23-24, would be a significant leapfrogging in our core fee income this year. These are the key financial ratios. The net profit per employee has improved to 20.62 lakhs, the return on equity at 28.43. The COVID resolution, the numbers are 1,256 crores. So I think we are in track in terms of the overall stress in the resolution, COVID resolution accounts. These are my NCLT, 99.94% of PCR in that. The treasury operations, in the last year, we take a conscious call to reducing my duration. We are able to partially succeed in that. The duration has gone down from 2.92 to 2.68. My capital adequacy still remains healthy at 17.10. My CET ratio has increased to 14.3. CET1 ratio has increased to 14.32. So we are adequately capitalized. The growth story that the bank and the risk-weighted assets movement are in a much control. So we are trying to move in a capital optimized growth that we are trying to move in. Various initiatives on digital journeys that we are taking, and these are all going to help me for customer acquisition and acquiring more and more customers. Our Apple Play Store rating has improved to 4.2 in both Apple Play Store, and the Google Play Store has improved to 4.2. The unique feature of our mobile app is that it gives the same experience, UI experience over the web and the mobile app. We are one of the few banks that are proud to have this feature in our mobile operations. We are now going to scale it up and make it a viable product for the bank for customer acquisition and giving services to the new age customers. These are some of my digital numbers. Various initiatives we are working on in the digital front, the WhatsApp banking, the wearable banking, tab banking. I think tab banking will play a significant role in customer acquisition, and the other online current account opening. We are not having a very good base on current account holders. So the online current account opening will be one of the focus areas for the future digital initiatives. This is my shareholding pattern. And of course, we will be consciously expanding our footprints. We have now opened 28 branches for the so far since April 22. We have now increased the number of branches to 1,553. We intend to increase it further, another incremental 40 odd branches for the current year. So we should be around 1,600 branches at the end of the year. The BC model will be implementing the corporate BC model. Around 2,000 BCs we expect to imbibe in our bank in the current financial year, which will increase my network and help my customer acquisition and collection efficiency. So these are the various initiatives planned for the current year. Branch expansion, onboarding of NBFCs for co-lending. We're already there. We'll increase it more, particularly increase it to the non-priority segment. We are doing it in the priority segment now. Now RBI has permitted us to do the non-priority segment also on co-lending. So that is what we are trying to highlight here. Capacity building would be a focus area for improving the skill, and fintech collaboration will be another area. We have taken out our RFP on fintech policy, fintech collaboration. The RFP process is on. We feel that we'll get a lot of insight into how to build our underwriting and customer acquisition and through the fintech that they are in the market. And of course, we'll be establishing a CASA back office, which will take care of my opening of current and a savings account, revamp the call center to a profit center, engage business correspondents, as I mentioned earlier, addition of value-added services through the PSB Unicap, and bring more and more customized product of different segments. The guidance, this is my final slide. The guidance for the current year is for deposits will be 8 to 10%. Advances growth is 13 to 14%. Gross NPA, we are at 6.97 now. We will try to reach below 6. In net NPA, we are 1.84%. We'll try to reach below 1.5. PCR, we scale it up above 89%. Recovery upgradation, 2,151 crores was what we achieved last year. We intend that we can increase, we can have a recovery upgradation of around 1,500 crores for the current year. NIM, we expect to be over 2.95. I think there will be a lot of questions on this front. We'll be happy to answer them. Credit cost should be less than 1. Slippage ratio at less than 1.25. Overall, if you see the achievements of our guidance of last year, apart from a few parameters which we missed off marginally, I think we were able to stick to the guidance that we gave last year. So thank you very much for your patient hearing, and I'll be very happy to take your questions one by one. Thank you very much.
Hi, sir. I hope you can hear me. This is Ashlesh from Kotak Securities.
Please, can you speak a bit louder, please?
Yeah, is this better?
Yeah, please. Thora volume dekh lijiye.
Yeah, so my question,
Yeah.
first question is on the yield on advances.
Yeah.
That seems to have declined QOQ by about 25 basis points. So if you can explain what is causing this decline.
Yeah,
That
can
is
I
first
stand up
question.
because I cannot see you? That is because, as I said, that the interest reversal that happened due to the slippages, incremental additional slippages that for the Q4, that had an impact on my yields and my NIMs, everything. So the major impact has been due to the reversal of interest. The reversal of interest for Q4 was 72 crores in totality. And that is what changed the scenario for the yield on advances, QOQ. Otherwise, on a YOY basis, we are pretty on track.
But are you seeing increased competitive intensity in any of the credit segments, which could be possibly putting some pressure on the yields?
No, in terms of if you see my slippages in the other segments, particularly the MSMEs and the retail, they are primarily on track, and I think they are under control.
No, I was talking about competitive intensity on the yield front.
Oh, sorry, I didn't get you that. Yeah, that would be any competition is healthy, you know. How you encash their opportunity is important. We cannot be shy away from competition. Competition will be there. We are in a commercial business. The competition is welcome. The point is, how do I overcome that competition, and whether I am able to generate alternative sources of high yielding income assets that need to be worked on. So what we'll be doing is that in the current year, we'll be focusing on those products which are high yielding, like gold loans, the personal loans, and we are going in a big way with co-lending that gives me high yielding. Certain co-lending segments on the non-priority sector gives me a lot of traction. So while competition will be there, I'll try to make it up with some portfolio building up in these segments. Like if I can give you, for example, that on the co-lending front, we are at around 1,000 crores, 945 crores. We intend to scale it up to 2,500 to 3,000 crores in the current financial year. The pre-approved personal loan, we are at 145 crores. By increasing the funnel, we intend to bring it to around 750 to 1,000 crores. Gold loan will scale it up. So these are some of the identified products in which we'll be closely working.
Thank you, sir. Sir, second question is on the breakup of your loan book. Can you provide a breakup across EBLR linked advances?
The EBLR component is 35% and the MCLR is 52%, isn't it? Yeah, is correct. EBLR is 35%. We increased the EBLR component from 32 to 35, and MCLR is at 52%. So 87% is
floating.
Right.
So just one last question. How are you seeing the credit demand across segments now? Do you see that loan growth can hold up for us in that 13 to 14% range? Are you?
Yeah.
Do you feel
See,
confident?
there's a lot of. I'll tell Dr. Yadav to pitch in here, but just for the opening statement, I feel that there is a lot of scope for the credit demand in the country, and there can be a slowdown. What I foresee is that the credit growth, which was last year around 18 to 19% overall, if I look into it, may stabilize around 15%, 14 to 15% in the current year as a whole. So that much of incremental delta impact will be there. Otherwise, within that space also of 15%, I think we have enough sectors to work on. I think Dr. Yadav can give a specific answer to that.
Yeah, beside that, in the growing economy, credit demand is huge. And in the terms of segment wise, I will say as far as this corporate demand is concerned, our focus will be verticals, health hospitals, food processing, besides the existing infrastructure lending. So this is huge demand.
And you see corporate to drive growth in FY24?
Sorry?
You expect that corporate segment will drive growth in FY24?
Corporate credit growth.
Corporate.
He's asking corporate credit growth. Do you foresee any growth?
No. Which segment do you
Achha, which
will
segment?
drive growth?
I said, our focus will be in this year FY24 will be on pharmaceuticals, health and hospitality, as well as food processing.
And what about retail growth?
Now coming to the retail, our retail is the main driver is home loan, vehicle loan, gold loan, and PAPL. So if I ask the home loan is a very safe as well as high demanded segments. Coming to the MSME, our targets will be the mid-side MSMEs. And moreover, the best model and the future of the MSME and RAM, I will say the co-lending model. So far RBI has only allowed co-lending in the priority sectors. Now they have opened, particularly they permitted us for the non-priority sectors. So during this year, we could build up the co-lending book about 950 plus crores. Now we are expecting 2000 plus, and this is very safe in the sense, as on date, even we don't have any SMA1 in the co-lending portfolio.
Thank you.
Thank you.
Sir, I am Ashok Ajmera, Chairman Ajcon Global. Sir, our first of all compliments for continued good performance quarter after quarter.
Thank you. Thank you.
And coming to the very good profit levels, net profit even after the tax and everything. Tax is, of course, I consider it maybe notional only because we have DTA debits there. Having said that, sir, our NIM is still a concern. You also said in your presentation, and I would like to have a little more discussion and elaboration on that. And one main reason is that our CASA, traditionally is very low. I mean, we are in the range of the 33-34% of the CASA. And because of that, the NIM is there. Another is that maybe, yes, it was prudent earlier to go safe on the credit book, very, very safe, having seen the past, the problems and other things. But now, when the markets have opened up, the credit growth is very good. And if we compare some of the near peer banks, the credit growth is as high as 29% in Bank of Maharashtra. And but still, we are seen to be still very, very conservative. So that is one area where if we can grow corporate book, MSME, where you can have a higher yield, your NIM can go a little higher. Secondly, our reliance, too much of reliance of only on retail, and this, makes us very, very competitive in the rates, and the NIM again gets affected because of that. So one question is on this, that why don't we think a little bit out of the box and rework the whole credit targets and, the strategy, where we seem to be very conservative. It's good to be conservative, but at the same time, you have to be in the market. So that is one thing where I would like to have both of you, your comments on that.
Yeah.
My second question is on the recovery and upgradation in the 24 target is, so, we had a very big account of Shrey.
Yeah.
I think you had about 1,200 crore exposure on that. And the Shrey solution is now soon coming forward. I think COC has already, you are all on the verge of finalization. You got two good bidders also. So that is, if that is included in the overall this thing, so will the target be still the recovery and upgradation will be same, or it may go little higher on this? And my third in this round, because a lot of other colleagues are also there, they may be asking the question, is on the treasury front. That now the things, the rates are like easing out. I think the 10-year treasury is now almost 7% or below, sub 7%. So can you give some color? You said generally that yes, treasury will do well, but some idea to arrive at some future profitability and some numbers on this. So these are my few observations and questions on my first round of questioning.
So if I
Thank you.
summarize, thank you, sir, for your question. If I summarize that you have three questions for me, for my team, is one is why are we not giving a guidance of much more than what we have given in credit? Number two, whether my slippages of recovery upgradation of 1500 will include SREI. And third is, of course, on the treasury. So let me take them one by one. If you really look into the business growth of the peer group, and particularly the bank you are mentioning, over the last 5 years, if you have made a study of that, and you must have done it also, the advantage of banks of the names that you are saying is the great advantage they have on the low cost resources. The bank, what you mentioned, has a CASA ratio of 55% at this point of time. So for a bank of my size, which has been traditionally at a low CASA ratio, to lend qualitatively and also be simultaneously remunerative for my balance sheet is somewhere which needs to balance out. If I need to do corporate lending in the aggressive way, if I have to grow at 30%, I cannot mobilize CASA at that rate at this point of time. So if I have to do that, I have to really go into bulk resources, which again is a double whammy for me. So what we are trying to tell to you is that we are moving step by step. We are qualitatively moving in the market, and we are conscious that we can do more. But while we are conscious of that we can do more, we cannot also ignore the fact that my low cost resources are a challenge at this point of time. In spite of all the efforts that we put in, if you see in the current quarter also, some of the private banks and some public sector banks have lost out on the CASA ratio. So there is a shift from the low SA and the CA, particularly the SA, to the retail term deposits because of the incremental delta additional rates that they were offering. Every bank was offering, and is naturally this is a part of the cycle. So till we have a really good revenue, good marketing avenue for generating low cost resources, just to get for the sake of competitiveness to go into the market and lend aggressively, ultimately things will not work out. Again, the pressure on the names will again, you will only ask me what was the purpose of going aggressively when you cannot generate resources. So I have to maintain a balance. So to make the answer short, the point is that as I generate those resources, I can lend more. And that is exactly what we are doing this year. We'll try to generate more and more institutional CASA, more and more salary accounts. Those SOPs have now been in place. We are trying to generate them. And as we generate them, 13 and 14% is, and of course, the system, let us also recognize one fact that the system will also moderate itself. What we had last year, I think your analysis will also reflect that this year, it will not be as high as last year. There'll be a moderation there. So we need to be a balance out of it. That is number one. Number two question is on the recovery upgradation. Yes, the SREIs we have at 1200 crore, and we have kept a guidance of around 1500 crore of recovery upgradation that we have just seen. It includes that. To answer your question, it includes that. But why have we kept it? So you can say 1200 crores to udhar se milega, but 1200 crores to udhar se aayega nahi na. Udhar se kam hi aayega. So whatever comes will be part of that kitty, and the rest what has happened is our inventory is coming down in the gross NPA. Now, earlier it was 8,000 crores plus. Now it is 5,600. So my inventory on my gross NPA is coming down. So certain hard accounts will be there. So which will face a normal hurdle for recovery. So that's why we have kept a guidance of 300. So that is what it is. And the third point was on your treasury. Yes. Till March 23, we have given a MTM of 126 crores. That is there. Okay. So with the yields now, at least at this point of time, as we talk, is getting a bit favorable. We are expecting a lot of write back on that. I cannot share the number at this point of time, but the write back is there. Number one, let me finish. AFS book size, एक बार देखना कितना है. I think we can have that. I'll just, it is there. Exact numbers will be there. The book size would be, is there in the treasury slide? Can you just put in that? Yeah. So AFS is not, HFT is not there, hardly any. So it is around 11,530 crores. My trading profit will increase, number one, and I am started booking them also at this current juncture. And my MTM reversal will also be there. And because I was a negative there, I'll have a double impact in my positive balance sheet. So overall, I think things will be much better. Hopefully, let us hope that the yields improve further and remain stable. That's a hope that we all have. Is possible. It's possible. Yes, it's possible. And that is exactly what we are hoping that will happen. You want to add something?
Just I'm very happy that market is watching us very closely. And this kind of movement is observed by you all. But just to supplement what Ajmera Saab has told and what my MD has told, you might have observed that last year the credit growth was merely 3%. Now it is 15%. You should not be told that we are so conservative. We are very, very proactive, but we are very, have the prudence to grow at the speed which is appetite also adequate. And in the future, we are also planning. We are catering and grabbing the almost in every sectors. And I think rest has been responded by MD sir. Thank you so much. Definitely, that's I'm saying.
And you please do so continuously.
That is I'm saying, see, when we are only 3%, we were not able to come before you. Now we are having 15% plus, we are eager to come to you and know your more anticipation and expectation from you. Thank you.
Almost 50, 70 years of experience in a big bag.
Right.
So, collective experience.
Yeah, sure. Yes. And thank you for pushing us further. Continue to please push us. Yeah. Please.
My name is Manoj
Uनका mic channel, huh? Yeah, please.
My name is Manoj Alimchandani. At the outset, let me compliment you on 2 points. One is the operating profit growth, 69%. It's quite good in this environment. Second thing is return on equity of over 28%. We had discussed it at the last meet at Taj Lens, and also now it is quite good. You have sustained it. In fact, you have increased it. And this compares very well with the top tier banks, which are in the range of 16 to 18, 19%. And other second tier banks are struggling in that 8%, 10% range. So this is really outstanding.
Thank you.
So heads
Thank
off to
you.
your whole
Thank
team.
you.
Now looking at these things, return on equity, I hope you will strengthen it. It's not difficult. Now looking at operating profit, 69%. One is how sustainable it is. Second thing is I would like you to, if you can show the slide number 20 on the
Please.
screen.
Slide number 20.
Yeah.
Okay. Yeah.
It gives the analysis of the income part of it.
Yeah.
Other income. Here, what we see, the growth in operating profit is due to high other income.
Yeah.
Your fee income has gone up. That is excellent. And we have this recovery in return of accounts. I think 404 crores. It is a main key point of your Q4 performance. Now we discussed in your answer to the previous question, recovery targets for next year are also quite stringent and quite stiff, which you are likely to achieve. Now, point is how sustainable it is. Operating profit growth. Looking at this number, apparently you will do well in the few quarters due to some particular softer accounts where recovery is almost coming. So operating profit growth is very, very important. If you can elaborate in detail on that. Second thing is we are suffering on deposit growth.
Yeah.
YOY, some sense is there, but if you see Q on Q, deposit growth, there is no deposit growth. Q on Q, December to March. And last time you had mentioned about lot of efforts to open salary account, payroll accounts with lots of PSU companies. Some had given commitments, a lot of efforts is going through because that's the way forward, actually. So what progress is being done there? And you're also scaling down your annual deposit growth target, which is actually quite a concern. You should have better than the system growth in deposit. We look at the system growth, you match that or you have 1 or 2% above that will be quite good. In fact, never come down below the system growth. So if you can elaborate on that. Next is on the lending front. So you mentioned about in your opening remarks about co-lending, some fintechs and all, where I think you have higher yield. And last time also we had discussed the groundwork you had done in that. If you can elaborate on the progress which is happening. And also MSME lending is quite a good opportunity where you get higher yields and current environment of low credit cost. Apparently that cycle is going to continue for the next 2-3 years. So how you are trying to take advantage of that?
I didn't get to sorry, the last part you said.
The MSME growth.
MSME, yeah.
Because that gives us higher yields. And particularly if the lending cycle, which is good, which is likely to remain good for at least for the next 2 to 3 years. So this can give us higher yields and higher profitability. Then one area of concern is this agricultural slippages. And you had given the deep dive into it.
Yeah.
Apparently it is more because of agricultural slippages. If you can highlight what is there, is it something which has happened in March and you will be recovering in the April, or to what extent, or there is a high concern because of that. And lastly, on the point of last quarter when we spoke, we talked about some efforts you are going to do on digital transformation and app. And if you can give further details on what progress you have done on number of transactions done through digital downloads, etc. And the way forward.
Okay. So there's a pretty good number of questions for me. Yeah. So thank you for all your questions. I'll try to answer them one by one. First of all, let us start with the slide that you referred to on terms of the operating profit. Yes, you are absolutely right in observing that my Q4 numbers of operating profit growth was primarily driven by the recovery in return of accounts of 404 crores and my 49% QOQ growth in the core fee income. And your question, I think, was whether this is sustainable or not. So in terms of my operating profit, yes, we had a good number here. See, there'll be multi-pronged approach when I talk about my operating profit numbers. If I come to the operating profit slide here, we had finished at 1,450 crores and we had a net profit of 1,313 crores. So what are the multiple factors which we will be looking into while setting the tone for 23-24? What are the factors that will come in? While recovered in return of accounts, we feel that yes, the year as a whole, we can. The last year we built a recovered in return of accounts at 536 crores. We finished at that. Okay, we still feel that this is sustainable for the current year. So we have set a target out of those fresh recovery upgradation of 1,500 crores. We feel that 500 crore is for our internal target on the recovery in right of accounts. Okay, so that takes care of one part of the annual part, that we had a recovery return of accounts of 512 crores. That is, at least for the current year, we feel it is sustainable on that figure itself. Number two is the core fee income that you see. We had a 8.89%, 371 crores to 404 crores. What we will be working on is that, as I showed my partner increase in my slide here, that yes, the overall figure that we look into is that we should increase our core fee income overall particularly, which is internally within this core income, is very minuscule at around 25 crores, or 26 odd crores out of this overall 404 crores. And we intend to increase it threefold, means make it around 100 crores there. So we're trying to increase there. The other part, of course, which I think we are missing out, is treasury income, which is negative 14 in this current slide. And as I said in my opening remarks, my treasury income will also increase to that level. Trading profit will increase, expected to increase, let me qualify. And my MTM provisions will which was 126 crores last year, which is making that negative 114 crores, will get a right back. So whatever we miss out on my whatever I miss out on my recovery, if it happens, we are going to compensate that through my increase in core fee income, increase in my treasury income. I think that is one part of the story. The deposit growth, I think, yes, you are right. We are at 7% deposit growth. Total deposit has grown by 7.73%. See, why has it been muted? We are also rebalancing, like we have rebalanced our advance mix between RAM and corporate, which was predominantly the corporate segment. We are now rebalancing our liability franchise also. And much of our deposits were also at a bulk deposit component was pretty high. We were having a nearly 27-28% of bulk deposit percentage in our books. So what the answer to your first part of this question is that why it is only 7.73. Partially it is answered by this logic. We are trying to reduce that part. So now we have reduced it to below 25%. The 2% we have knocked off. We require a stable retail liability base because we are not having, by legacy, we're not having a very big liability. Our customer base is very skewed. It is in a geographically oriented area. So we need to balance it well. And if there is a difference in the system of around 6 to 7% between the credit growth and the deposit growth, it is not fair for me to understand that I'll do something different with the legacy that I have. So that difference will continue to remain for another 1 or 2 years till we build up this portfolio in a big way. So our main target, as I said in my opening remarks, is that build my institutional CASA base to a large extent. So that will help my base, reduce my bulk deposit component. If my average peer group, the retail bulk deposit is nearly in the range from 10 to 15%. That's the average of the PSBs. Some banks are below 10 also. Some banks are 1% also. So in that context, I have to think of my balance sheet and how do I move it along with my other banks. So that is where we are looking into. In terms of your co-lending, your question on co-lending, we are at 945 crores now. We intend to increase it to 2,500 to 3,000 crores. That is the range we are looking to build our co-lending book. On the agri, you wanted a guidance on how co-lending yield?
It is more than 11%.
9.5.
In some of the product, it is 11%.
Average will be down 10%. You can take it as an average 10%. So that is where my yields will also be positive in the sense that I am doing more of gold loan, personal loan. These are the things which will have. So your question on agriculture slippages, yes, the primarily the Q4 slippages were primarily in the agriculture segment. You see 231 crores against 36 crores last quarter. That is the difference it has made to my book. And partially, we felt that it is better to recognize and move on because we all understand the complexities of our agriculture portfolio on the various external environment. So, and we are in a belt where the agriculture is a predominant economy. So whatever challenges are there, we have now recognized them. I will not say that it is totally off because there will be new challenges coming forward as we move ahead. But primarily, we feel that much of it has been recognized at this point of time. We don't foresee such of a challenge in the coming year, at least going forward. And digital initiatives, yes, we are working on various digital initiatives. See, ultimately, my CASA, these are all multi-pronged approach for increasing CASA. And the stickiness of the customer has to be improved. The services quality has to improve. The super app concept has to be implemented? What are the value-added services that we can provide in a digital app? So more and more customer acquisition happens. At one point of time, and year down the back or 2 years back, we were only opening accounts at a net run rate of 1.5 per branch per day. So now we have come to a situation where it is now 2.75 per branch per day in terms of the savings account, I'm saying. So there is a traction of mobilizing customer acquisition. And as my app becomes better, as my services become better, as my salary account mobilization become better, I think my the CASA portfolio becomes much more healthier, which gives me some room for further lending in a better way. So my digital, and what are the things that we are bringing in? We are the only app, one of the few banks who have this app. The second bullet that you see, the same UI experience over web and mobile app. So this is an app which we are now trying to market. We could not do that. People do not know this product, that we are having that omni-channel experience. So now the app has stabilized. That's why we have shown that it is at 4.2 at both Play Store and Apple Store. It is unique here also. And it matches with my name of the app also. It is unique. Is that normally to get this rating, the private sector banks, if you go into a Play Store, will range between 4.3 to 4.4. So my app as a public sector bank, and that to Punjab Sind Bank, getting in this range itself shows that we are very serious on this aspect. And more features. You asked about my digital transactions. It has grown by 78%. UPI has grown by 124%. PSB unique users, 182.51. We are set a target. In our bank, the customer base is around 1.35 crores, if I look into that way. And the non-PSBD customer base is around 60 lakhs. And so when we brought this mobile app last year, we had set a target of 10 lakh downloads for the current year, last year, for 22-23. And I'm happy to tell you, we have nearly achieved it. The downloads have gone up to 9.52 lakhs. So now the next target is to not only increase my downloads, increase my activation. So activation rate of those who are downloading my app. That's why we are bringing those services which will help my activation of my digital app. And WhatsApp banking is very near. It will be available very shortly. Wearable banking. This is another new dimension for new age customers. Tab banking. That's very important for customer acquisition. Today, customers will not come to the branch. People have to outreach and go open the account. So go with a tab, open the account online. It gets activated at the back end. That is the trajectory we are looking at. So tab banking will be there very shortly. Online current account opening. We have savings now. Current account opening. We have only 4,000 crores of current deposits. The prime problem is our digital apps was not conversant in today's environment to handle current account holders. That is to be frank about. So that we are working on now, and other areas that we'll be working. So overall, we have a lot of initiatives on the digital front. And I think the way we are going strongly on the digital way, the customer acquisition, the stickiness, the product per customer that we are going to sell will be qualitatively much improved.
So one point on
anything I missed out, please let me know.
Yeah, digital, you are given the percentage growth on a low base, but on total percentage of transaction, how many are digital out of 100?
Yeah, it will be around 84% now.
84% are digital.
Yeah, that is excluding ATMs.
Okay.
Core digital is, of course, that is driven by UPI, that every bank has that.
Okay.
But the overall percent, technically it is 84%.
Lastly, what is your deposit and advances per branch?
Madam, आपका data देखना. I think business per branch, I think I can show you.
0.85. Okay.
Yeah, business per branch. There you are, 124 crores. 120 business per, that is a slide bullet 3.
Okay. Now top premier banks are started giving data. It's around 200 crores advances and deposits in the top main 2-tier HDFC Bank and ICICI. Lastly, I think deposit growth, you should take a learning from what IDFC First Bank is doing. Maybe all of you should go and visit their new branches and how they are trying to control
Sure.
cost to deposit, and everybody needs to learn from
yes.
and wish you all the best for the coming year.
Thank you. We'll do that. Yeah.
Sir, congratulations on a
Thank you.
stable result. I'm assuming some of the answers that your outlook on markets, that rates have peaked.
Sorry,
The interest rates have peaked,
interest rates are picked, yeah.
whether it's GSEC or global benchmark, that is a Fed indicated yesterday night, and maybe MPC. Now, in view of that, you have already answered that you will have a GSEC reversal this year.
Yeah.
The second assumption I'm going by, that your MCLR has peaked.
Yeah.
So in such a scenario where our CD ratio is stable, but we have a long gap to capture the business. So in such a view, would you increase your advances in the first half on a more aggressive basis to capture higher rates which are offered by the corporates? Or would you wait for the rates to decline and continue the business?
That's a very interesting question that you have asked. How do I plan myself? See, planning should be over a yearly basis on a medium to short term. But the planning should also be flexible in the sense the dynamics of the interest rate scenarios also need to be looked into. In the current situation, you are right. The way the things are moving, it seems that the yields are at a stable phase, and we are going to get some benefit out of that. But to answer to a question very specifically, that whether we'll do aggressive in the first level or first upfront, or we'll wait for that, that's an area which we'll leave to the market dynamics to play as its role, and we'll not be very conscious of the fact that what we should do upfront and what should happen, depending. As I said, my main challenge of my deploying resources is my garnering of low-cost resources. So if that thing happens, that takes some traction, yes, we can really go into that, and we're already working on that. But till we do that, it is not advisable from our perspective. What we understand from the book is that to grow very aggressively without having the backup of a stable retail base or a stable CASA base.
No, but you may take a 1 year, 2 year kind of instrument. No, it's not necessary to take 5 year, 10 year term loans.
That's fair enough. So that's what I'm saying. It is very difficult to say as a strategically what I will do on a portfolio basis. On the merits of a case, if a case comes up, we'll take it as a matter of.
No, the reason I'm asking is between doctor and yourself, you have treasury and advances, both combination well versed between your previous bank and current bank. So as your experience speaks for itself from the past, I think we are well positioned to capture that. So I'm just.
No, you are absolutely right in your observation. And I'm in fact, though I have a treasury team, I take it very strongly every day morning what happens in the dealing room, and I try to understand what best we can do in the present context. So you're absolutely right in your observation that the times have come where we can take leapfrogging up, as you rightly said, but we will leave it to some of it to the merits of each case and try to work on. The skill development also needs to happen, side by side. One banks which are growing in quantum and leapfrogging are also very conscious of the skills that they have a backup. So I need to take a very strong position on that per se also. My skill development, the dynamics of today's financial environment is such that so many new things are happening. The context is changing every day. So my people management and the people resources have to be skilled, reskilled, de-skilled, whatever has to happen. So that has to go parallelly to that. So from bank of my history, we need to be a bit circumspect into how we move ahead and not really try to emulate the system as others are doing. It's better to be circumspect, create a strong, stable base. See, everything, the base has to be stable. And we are actually looking into that. If you see the last 2 years' performance, the stability is coming into the system. And to have a back-to-back profit of above 1,200 crores and 1,300 crores itself shows that the base is getting stabilized. So once the big base becomes much more healthy, stability is there, I think leapfrogging can happen. We can press the button at any point of time.
Sir, hearing your answer, skilling and hiring both seems to be a priority from your management team. Now, what kind of budget are you doing between digital and hiring, and what is the average age today? So you will be able to blend what is the vision of the bank, because what you're taking a lesson is from your history,
You can answer that question.
but your future is not dependent on what is your past.
Absolutely. Regarding how are we skilling and reskilling them, people resources.
Actually, what we have done is human resources, that in the bank is very important thing. So last year, in a detailed exercise, we have profiled each one of the staff members and we have grouped them into different skills. And we have job families, we have organized them into job families. This is the first work that we have done. And regarding HR initiatives that we have taken. So another thing that we have done is that from the market where you must have seen our recruitment drive, we are taking making lateral recruitments. And you see one of our CRO also is from the market. We have taken directly from the market, who has come from State Bank of India. And similarly, we are taking other CXOs also. The third thing is that now we have already started deputing our staff members to various top level institutes for training like IIMs, etc. And also the erstwhile BBB, they had devised a program for leadership development program for the top executives. And each of the year we have been deputing 3 to 4 officers at the level of DGMs and GMs to groom them to the higher level. So this is a continuous program, and we will continue with this upskilling program.
Sir,
Coming to, I'll
yes,
just
sir,
supplement.
I'll just answer a question so you can combine that. You know, the story which I've heard in some of the answers which you have given is fleet on the street seems to be a very important part of your journey, because you're looking at CASA, retail, co-lending, MSME. So the top management can drive the bank, but fleet on the street seems to be important. And I'm sure I am, and all these top management schools, this staff is not going to be trained there. So for that process, what kind of spend are we doing in digital in terms of reskilling the entire bank? Maybe new age staff, new recruits, whatever. But that seems to be the important part of your journey for the next leg.
Yeah, I think I appreciate your question, Mr. Choksi, is that yes, see, what we are not focusing entirely that we are going to reskill our top management or the higher end of our executives. There is a parallel exercise that's going on in the bank to reskill the middle level and the junior level. And of course, we are very conscious of the middle level also, or the scale 4s and the scale 5s, which are a very important link between the lower executive to the higher executive. So the lot of skilling and the particularly, if I do co-lending also, if I do back office structure, MSME lending also, I need skills there also. It is not that no skill is required there. So we have given a very focused priority through our staff training college, other staff training colleges, to create batches and to educate and reskill this level of employees who will be, as you rightly said, feet on the street, who will be on the ground to help us out on the assessment and turnaround time. So it's very important that, so while we will be sending the top layer to the executive programs, which is required for their level, the parallel efforts will continue to happen at the lower level. So we are now planning a separate, we are creating a separate batches for branch managers at the 3, 4, 5 level, put them into cohorts and build them up for the future leadership, trying to build that up. So we are now internally, we have revamped our training advisory committee, so that we have taken external experts for that. We'll be doing a lot of groundwork on that. So these are, in terms of the quantum of, you asked a question regarding the quantum of investments that is going to be made. on the digital front. At this point of time, our technological, first of all, upgradation of 7x to 10x is happening. And we had a 250 crores of investment there, which is now likely to be completed by September entirely. So once that is completed and we understand the Finacle 10 working and understand how it has stabilized, and then we post September, what we will be doing is really look into the from 10x where we move on in terms of the rising digital transactions that are happening, whether my 10x will be itself enough for the future next 3 years or 5 years. So we have to make a plan out of that. Why I cannot quote a figure at this point of time is because unless and until I come to that basic level of 10, I really don't understand how to make the next step forward. So we'll have a technology upgradation platform, upgraded version, and keep the concept paper for that post the implementation of the Finacle 10. So we leave it another 2 quarters down the line. I think the answer to that question will be much more specific.
Sir, but because you're doing last,
Yeah, please.
Choksi sir, let me supplement. I think you are also about hiring and this feed to state. See, there are 3 aspects which your bank has started in this one. Feet on streets, we are already in the process for robust call center, for which we are having a large number of feet on street. Number 2, for sourcing the new business, we are also having a DSA channel. Number 3, for inclusive growth, so far we were having a very limited 357 BCs. Now we have already onboarded and things has been started for corporate basis. And in the first half, we will be onboarding around 2000 plus BCs, which will be reaching last mile of the peoples. So these are the way that our even the large force will be available on the ground. And for the other kind of top leaderships, I think my MD and my ED colleague has already explained.
sir, my question to you is, you have a rich experience in MSME.
Yeah.
Punjab being the agriculture, Haryana, your region, you have large pockets and relationship maybe 5-10 decades old with your bank. Now, how are we capitalizing on that? Because value addition and today's food habits are very clear that people cook less and eat more of ready to eat. And the supply chain is very good in the region where you are capitalized. Does your competition penetrate your area, or you will garner a larger share? Second thing, you have a rich experience from UP, which every bank is looking at because of the kind of expenditure in infrastructure and growth is likely to happen. In fact, somebody highlighted last week on media that reverse migration may happen, and in the manufacturing, we may not have people coming from the north, and we may have to look back to relocate to UP. I mean, those kind of fears are happening in state of Tamil Nadu and some other states. So you may be well capitalized from the knowledge which you have, but how is this bank going to emerge a winner? Maybe the current management team may not get the benefit, or the future of the bank will definitely get the benefit.
Will you answer that?
No, I think definitely your observations, your guidance is very correct. Now the times is of having the total finance planning of the peoples, and for that we require specialized relationship managers. That process is already on. For MSME, we are having the special relationship manager at our back office called St. Mars. And in some banks it's called SME loan factory like concepts. So it is there. And I think more will be.
I'll just supplement. I think you have put the big picture in mind. Okay, talking on a big picture in mind. Certain areas where we were shy of lending, so we are not in the trade finance area, so we need to move on that. We are not in the CRM concept, we need to move on that. We are not in the area of customer acquisition drive per se, so we have created a separate vertical for only customer acquisition. The fee income growth story needs to come back, it needs to grow exponentially, so we have created a separate vertical for that. The organizational restructuring has been done. We have created the back office for the small value segment. So specialization happens there. So these are fundamental structures which are getting into place, and which I'm very sure if implemented one by one, can really make the foundations very strong. The foundations need to be very strong, whether it is on the HR side, whether it is on the technology side, whether it is on the product side, whether it is on my processes side. All the areas need to be looked into separately. One is all complementary to each other. It cannot go in one direction. So parallelly, we need to bring a lot of things together and collate them and create a base structure. And that is why we are taking now in a stage of taking those. Last year, we took a host of initiatives. It has all culminated to a large extent. Whatever we planned, we got it through. The journeys will continue to happen. And one thing I think what you are hinting at, particularly the MSME segment, today, these segment, particularly agriculture MSME, will require great speed and collaboration would be the main area where we will look into. So the fintech collaboration, as I said in my presentation, that is there, and we have floated the RFP. The RFP is going to culminate very shortly. So the vendor process will be completed. We'll have a host of fintechs on board on the various issues. It's not only one single dimension. It can be anything. And a lot of, I think, cross-functional issues are there. So once the fintechs are there, we get the best underwriting standards happening. Our LOS gets improved. So the automatic lead generation management becomes a core area. The CRM can be implemented. We are now given to my corporate credit vertical. How do I implement my CRM for the corporate account? That gives a lot of revenue and customer relationship management, customer relationship. So that is what we all do. So the fundamentals need to be put in place. We are here to showcase that we are going slowly but steadily to first address the structural issues of the bank, and parallelly, as much as possible to qualitatively grow and give a good return on assets, give a good operating margin, get a good net profit margin. So those are the things. Once we have those things in place, I think leapfrogging is a matter of time for this bank.
My last question, we have deep roots of Punjab. How much of NRI deposits we garner and how much of FX business we manage?
Deposit का number किसी के पास है NRI? Number है आपके पास?
No, so
I'll share to you.
I'll take it
I'll share.
offline.
I know it's area. So see, Forex is another area. So let us answer that. Data point I'll share with you. Data point is not an issue. The more is the strategic thought process you are working on. Forex business for me is again a small kitty. We didn't have this appetite to do Forex business. So what we are doing is we are now doing NRI outreach programs. We have done NRI, Mr. Raghavendra was himself instrumental in going to places where to do outreach on NRIs, to garner deposits. We are getting the competitive dealer branches, but our Forex turnover is very small. And many banks, many customers are having credit lines with us, but doing Forex business with some other bank, doing more business with some other bank because we don't have that structure in place. So Forex needs a good investment on time and resources. So once we develop that, all these things will happen in the bank.
Thank you for answering all my questions and
Thank you.
Good luck.
Thank you.
Good afternoon, sir. This is Rohit here, left side.
Yeah.
Sir, I would like to ask you regarding your co-lending space. You're expecting the business to go from 950 crores to 2,500 crores. So who are these co-lending partners basically? And what is the kind of lending being done with them? And secondly, I would like to know regarding your new to credit customers, So for new to credit, new to credit customers year on year, how much you have added new to credit from 22?
New age customers.
New to credit.
Oh, new to LTC.
Yeah,
Okay.
from FY22 to 23. Thank you.
Let me respond like that. In co-lending partners, we started co-lending last half years with only one co-lending partner. Naming the partners, I think will not be fair enough here, but now we have extended more than 6. And as I explained earlier, initially RBI has allowed and opened co-lending for priority sector segments. Now, because the co-lending is the best model to reach out and having the good underwriting systems, now we are also going for the non-priority sectors. So as on date, we have 6+ co-lending partners having the across the country outreach. So we may be having only the entire portfolio at one place in Delhi, but my co-lending underlying assets and borrower is spread out across the country. Number one. Number two, coming to the new to credit. Whatsoever credit has been happened this year, it is around our 50% total acquisition during the years new to credit. And in the retail, if I say home loan and vehicle loan, the new to credit customer is more than 70%. Thank you.
I think someone wants to.
Yeah, hi.
Hi.
Congratulations, sir, on a
Thank
good set of numbers. So my question relates to basically more of from the financial performance with respect to credit cost. So this year, again, we saw a marginal negative credit cost. So your thoughts in terms of how long this can carry? That is one. And probably in terms of from your guidance perspective, your sheet perspective, you have given that you would like to maintain a PCR above 89%. So is that indicative that probably in terms of the net slippages would continue to be very low and that is driving your PCR to be above 89%? But in that context, 1% kind of a credit cost, is it too conservative?
Yeah. See, it is a matter of interpretation of whether it is conservative or not. But yes, let me answer to be specific, to specify the answer. Credit cost for March 23 was at a negative. Yes, of course, because of the provision write back that we had. It's a mathematical calculation, nothing to talk on that part. Why have we kept at less than 1%? You know, it is better to be conscious of the dynamics of the ecosystem that happens. It is, while we can be very aggressive in giving a guidance, but you know, suddenly some news happens, as it happened. One airline news came into the picture, certain thing, everything was, there was a ruffle in the market, something happened. So these sort of things will always be there. And we don't know globally how things are panning out. There are still some sort of uncertainties in the global platform. While the yields may stabilize, but the uncertainty is still there. And the impact on the Indian ecosystem it can have some impact, and which can come as for a surprise. So keeping those things in mind, we think that it's better to watch, because if we give a very aggressive guidance on credit costs, it maybe seems that we are very complacent about the things. It can be interpreted that way. Are you too complacent? You can ask me, if I gave a 0.5 or a 0.25 credit cost, you may ask me whether are you too complacent about your situation. To keep this a balance, we say that yes, we are still at less than 1%. Things happen. Agriculture, though we have recognized well, it's a story that will come off on or off, because it's a environment that in the system that we are in. These sectors are very vulnerable sectors, agriculture, MSMEs. So to that, keeping that in mind, it's okay. In terms of actuality, if you see my SMA portfolio has gone down above 5 crore. And even the data I don't have here, but even the 1 crore above data, it's a significant improvement is there. So in fact, if you look at, I think there is a data on this. Yeah. So my SMA 2, if you see above 5 crores, has gone down to 107 crores from sequential down. Yeah. So it's a good number that we are working on. But a lot of activity goes to achieve these numbers, you know. So while we are conscious that things are improving, but we still feel that the war is still on in terms of collection efficiency. So we'll continue to have our war rooms active and not dismantle them. Okay, so we will continue to focus very closely. And as my call center vibrancy comes in my recovery and my monitoring, I think we will be in a much better position to give a better guidance and a much more as you will like it. Okay, so that is there. So it's a matter of interpretation how we look into. it's better to be conservative and achieve something better.
So the question also pertained to because 1% plus ROAs that we are delivering, a large part of the gain is actually flowing from the credit cost.
Absolutely.
And we had seen the 2005-7 cycle where probably in terms of the credit cost was very low or negligible. And your thoughts in terms of even if there is some pressure in terms of asset quality that builds up 6 months or one year down the line, would you be reducing your PCR or probably you'll keep your PCR healthy or strong the way it is?
Okay, there are two parts to your question. In terms of your in terms of your question on the operating net profits, ROA has been driven by whether it is driven by primarily by your right back. I think to be fair, if you see my let me see if I can get that slide on regarding my provision slide. I'm getting confused where it is. Yeah. See, if you see that my net profit has been 1,313, the loan loss reversal and standard SCS 530 crores is a factor. But some of it, my operating profits may also has come due to some good recoveries in my write-off accounts. Okay, so it is not totally that I am in terms of ratio. Yes, you can mathematically say that yes, it is impact is there. But if I can increase my other income, if I can increase my net interest income, as I elaborated earlier, achieving a ROA of above one is quite possible in the context. We are moving in that direction. I am very confident that the ROA can be improved further for me, for my cycle. And what was your second point was?
No, so would you be compromising on the PCR?
PCR. Ahead? Okay. The PCR, see, today we are at 89.06%, right? Ideally, we would like to have it 90% plus. We watch this 1 year performance. Some of the big ticket resolutions are going to happen. As Srey was already discussed, something happened. 1 or 2 more accounts will get resolved. And but till now, let us strengthen our PCR above 90% for 1 year down the line, and move on to that. In the next year, we'll take a call how to utilize that PCR in a different context. So for the time being, we feel that instead of working too much on my ROA, while we like to give a positive guidance on that, but to go overboard and increase my ROA and not increasing my PCR will also not be fair at this point of time. So we'll keep a combo approach on this.
So final question from my side in terms of MSME lending.
Yeah, please.
If we actually look at it, then probably public sector bank as well as for us, the GNPA ratio has been high in the past.
Yeah.
Which has come off significantly in the last 1 year.
Yeah.
Now your thoughts in terms of what are the changes that you have brought about in terms of the risk management, that even if the economy slows down, probably we'll not see an NPA rise in MSME segment.
Yeah.
And also because you have actually grown around 6% on a Q-on-Q basis in terms of MSME, is that sustainable? So are you seeing a structural change in the way you're operating the MSME segment?
Very good question. Yeah, I think you are absolutely right. See, this is what I was saying also, that once I keep my structures well, if I keep a structures positively done, I think we can move very safely. Coming to your question specifically on MSMEs, yes, we have strengthened our LOS, our underwriting systems. We have got into the back office structure for segregating the sourcing and sanction. The observations so far are very positive. The trajectory of though it is 1 year old only, not even 1 year old, it is around 8 months old. So, but still we get early warnings in every account, what we were getting earlier. So the trajectory is very, very positive on that front. So the structures are working there. Third, we'll be looking into much more robust monitoring of credit life cycle of a borrower. Okay. So that is where again we are very strongly working on. While my risk management practices are getting strengthened in terms of my appetite, fixing my appetite, to what level of exposure I should go, whether there'll be concentration risk, etc. All that is a risk management perspective. I am trying to get into a mode where my everything is automated on a credit life cycle process, right from sourcing, right into the default and post default. Okay. If my credit rating engine becomes much more robust, my structural, and that is possible, and we are working on that. I think we can really much more work on a much more greater pace to increase all this, whether it is MSME or some part of retail or agriculture. And that is just thing that can happen. On the MSME front, yes, we are growing at what, 14% now, maybe? I know. How much? Or 14%. So yeah, we have a lot of room to improve there. I think we can improve it to further. With the co-lending space in place, I think anything about 16 to 18% is possible in the MSME space. So we're working on that.
So similar question in terms of the retail lending as well.
Yeah.
We have seen that probably the vehicle finance and personal loan, though those are very small proportion of the book right now. But the clear intent is to actually grow this book significantly. Are we tapping our internal liability customers, or basically in terms of how should we judge in terms of the performance of this book 1 year, 2 year, 3 year down the line?
Again, here we have now not only first part is existing customer. We have created products for existing customers, particularly the pre-approved personal loan. We are now digital in that front. The 3-click model on a mobile app for personal loans, we are already there. But yes, but that is only for the existing salary accounts that we have or the pension accounts that we have. We are now going to increase the funnel to the other segments based on the data analytics that we have, not only to our customer, but to our non-customers also. That to some segmental customer where we can have a high CIBIL score or a central government employee or a state government employee. So that is where we are coming in. Though, yes, because of the small base, the percentage looks very high, but we have a lot of potential in the personal growth story. And the home loan, of course, is a vanilla product for everybody, which we need to improve upon. And vehicle loan, we are also getting into the second-hand vehicle mode now. And there's a big market that is coming up. We are not present there. We are not visible. We're not anywhere visible in that area. So very recently, we have revamped our products on the second-hand vehicle loan category. And market trends are there that we can enter very strongly. Our yields are also better there. So we'll get into that space. The gold loan space, we are working on that. Whether our increasing, the trajectory is not here, but it is growing very exponentially there also, on the gold loan front. Again, a high yielding return asset that we can create. So all in all, my overall within the retail, these will be my specific areas of going ahead. The co-lending on the NPS segment also gives me a lot of high yielding assets. So I think overall we shall build up a good base there also.
And sir, not basically in terms from the near-term perspective, but your margin of around 2.9. When you're talking about the mix change in terms of some of these products as well as MSME and improving the CASA mix. So what is your basically ideal margin or basically a sustainable margin that you want to reach probably 2-3 years down the line?
Yeah. See, for a bank of my size and to be very, very grounded on my assessment, I need to be very grounded. Okay, and my legacy and the nature of lending that we have done, the loan book growth story that has happened over the past years, and the level of customer base that I have, the level of technology that I have, the level of digital methods of lending I have. Keeping all that in mind, and the low CASA ratio that I talked about earlier is also something we need to be working on. So if while we all try to get some benefit out of the high yielding assets here, I also need to do some corporate lending. We need to increase the book where my margins may be a bit squeezed. So it's a double whammy for me, a very low CASA historically, and corporate lending not being done, while I've increased my portfolio in my AAA rated assets that you must have seen, but the margins is very low there for that. So I need to have a balance to keep it in that in totality and be grounded to the situation. Anything beyond 3.10 would be my optimum level, which I look into in 1 or 2 years. It is not, and that is a practical assessment of the things that I have. Once, as I said earlier, my lending improves, my income generating starts, and I have a good CASA base, I think anything beyond that is possible. Maybe at least the average of the public sector banks can be achieved, which is around 3.4 to 3.5. I think that will be your assessment. I think you must be having data for that. So that would be a public sector average. But as of now, in a 1 year, 2 year horizon, I think we can look into around 3.10 sort of a thing annually. And we are pretty close to that, you know. See, if you see if you have observed my last 4 quarters, my Q3 was 3.12. My 9 months was 3.04. So I was pretty in line with that. We got this agriculture stuff. If that was, and the incremental interest reversal that happened in Q4 brought it down a bit more than we expected to be. And if I discount that, my yearly NIM would have been around 2.97. Okay. So pretty in line with my guidance, what would happen. And hopefully if I can plug that point of agriculture slippages, which I'm very sure we will, 3 is anyway possible in the current year, possible, and maybe another 10 bips next year down the line.
Thank you, sir, and best.
So,
Yeah, please.
so my question is with respect to the previous question, although our retail is only 17% of the book, we are growing this personal loan at 75% growth rate, although the quantum is very, very less. But do you are in the camp of that retail is just starting to grow and we may have 3 to 4 years of runway for this growth to continue? Or do you in the camp of saying that because there was a problem in the wholesale book over so many years, last 4 or 5 years, people are now focusing on retail, and now retail has reached to a peak and we may see some kind of a NPA cycle in the retail loan also. Thank you.
Yeah.
See, indeed, this all depends how resilient you are. And resiliency is nowadays measured in a 3-way. Am I financial resilience, operational, and organizationally? Now, as far as this financial resilience is concerned, this is not the only driving force that corporate is having high NPA. That's why we are moving to retail. No. It is the matter of the fact that demand is more in the segment. Moreover, my risk is diversified. And third one is, I am having the competitively more yield, and my customer base is going the more, that is more sustainable model. Even nowadays, it depends how business model you are functioning in. So this is not only the driver that corporate was having the high NPA, that's why we moved on. No, we moved on because of number of large customer base, that is sustainability. Number 2, high yield, of course, and risk diversifications. Now coming to whether it will be sustainable or not, definitely for the bank like us, which has started now growing after 3, 4, 5 years, some kind of legacy issues, that it is more sustainable. And strategically, the board has also decided that we should increase our percentage of the retail more in the total advances. So last year, if we was 50, 51, now we are now 53. Then FY24, we may be 55. It doesn't mean we will not be growing in corporate. We will be growing in corporate too, but on the segment and area and industries which I have earlier mentioned it. I hope I have responded.
Thank you, sir.
Thank you.
Sir, can I come again in the?
Oh, yeah, please.
Yeah. So, madam, something on the DTA and the tax and the carry forward losses. Like DTA is about 1,550 crores.
Yes, sir.
How much carry forward losses you have from the income tax point of view? And how are you planning to write off, the DTA again debiting to the P&L in the coming period?
Sir, our major DTA is on NPA provisions, and as of now in the books we are having loss as per the income tax, and we are coming in the MAT provisions we are paying tax as per the MAT provisions, and moving forward as we see that we are getting the reversal of the DTA. So we have some reversal also. In the coming years, when we will be making provisions, then there will be reversal on DTA also.
No, how much is the quantum of the carry forward losses as per income tax?
So in this year, we have 11 crores of carry forward losses in this current year. And in
Total carry forward losses are only 11.
Sir, actually, in the income tax, we don't have the earlier carry forward losses.
Okay.
And in the December quarter also, we have marginal profit. Now in this quarter only, we have moved into 11 crore of that income tax
So
losses.
it means from the next year, coming year, now you have to pay actual tax
Yeah, we will.
And they-
We will come in the actual tax forum.
under the new regime.
Yeah.
Okay.
No,
So
that's
that-
swapping. He's asking on the swapping.
Yeah,
The
yes,
new
sir.
tax.
No, sir, they are not saying, no, we are not.
Ah.
This year, we are in the old regime only. In the coming year, whether we will be taking the new
Yeah.
tax,
New-
it will be decided.
That we have not decided yet. That we have not
It
decided.
will be
Some
decided.
banks have gone in.
Yeah, no, but depends on your,
Yes,
you know, your,
absolutely.
We have a 1800 plus crores of DTA. So we have also MAD credits also. So that will
Yeah.
hit our profitability. So we'll decide on the figures, whether we'll move to the new provisions or not.
You want
Sir,
to say
come-
something, Raghvendra?
Yeah.
No.
See, this detail us, we have to, if at all we have to move to new regime, it may come to between 300 to 350 crore. That we will decide as and
yeah,
when.
that's what only I'm asking, that how much
Yeah,
hit
that
are we
is for
ready
the
to,
quarter.
ready to,
That is for the quarter. No.
no, tax component on that
Tax
is around
component.
350,
Yeah.
400.
So that we will decide when
Okay.
many of the banks have not moved.
Yeah.
You must
they-
have seen
Yes.
for the, and more than that, we are having MAT credit also. So
That's
MAT
right.
credit also we have to
You have to
exhaust.
consume that.
So when both are done, then only we will shift it to, we have assessed and each quarter we assess. And when we find that it is not beneficial to the bank, we are moving ahead with the old regime.
Okay. Sir, now we were talking about that, our PCR provision coverage ratio and this. So here I would like to know that how much buffer do we have in our provisioning, COVID buffer as well as overall buffer which is not allocated to any particular thing. What is the amount of the buffer which we have in our provisioning which can take care of some eventuality in future, like you
Yeah.
said, go air or something like that. Of course, we don't have it.
Yeah.
But
Yeah. We
so-
see, we have, we don't have much of a stress there, but still we have one of few.
Yeah.
We have one account where our state government, small value,
Yes.
small 300 crore exposure, where some issues are there, where we have provided standard. It's backed by state government guarantee standard, but we have provided 15% for that. Okay. We have provided 15% for that. So I'm right now. So about 40-45 crores have been provided for. So we are okay with that.
Other than that, any buffer which we have built up? Which
Use a mic, huh?
So overall, we have only this 100 crore or 100 crore buffer. We don't have any.
See, if you have seen our last 3 quarter results,
Yeah.
we have been providing additional for each quarter, which take care of my future aging provisions also. The Q1 we did around how much, 300? And then Q2 we did around 270 or crores. I don't remember the exact numbers, but we created those buffers which are getting utilized also as we move along forward.
Whereas whatever your assessment is there, it is.
Is
in tune-
so
tune of
in
that.
case of at least that much, we are
Yeah.
already covered.
Yeah.
Sir, some color on our overall, I mean, restructured book, COVID and non-COVID.
The total restructured portfolio of the bank as of now is 2,500 crores.
Out of that, how much is COVID?
Yeah,
COVID restructured.
It's COVID only.
It's all.
Yeah. 100%.
See, here is your data is here, 1,256 plus 1,000, so nearly 2,200. The good part is that the delinquency of the
Yeah.
GCL component is very less. What is the percentage now, Prabhat?
It's TCL, nahi, sir. Your COVID restructured.
COVID, sorry. COVID.
Here slippage ratio, we have on an average, it's around 1.4 only.
So,
Okay.
pretty
So-
okay.
So not.
Not much
I
of
mean,
an impact.
something very
And the
significant.
trajectory is working fine. That's why, see, the question was regarding our credit cost and all that.
Mhm.
So these are the things we keep in mind, you know, anything can happen.
But
at any
if
point.
all these things are there, then I feel that the credit cost will be much lesser than what you are actually
I appreciate that
anticipating
point.
because
Yeah.
these other factors are not there. So
External factors we have inbuilt in that guidance,
and
certain things.
and
which
the
can
ROA
happen.
may continue to be
It should.
sustained.
It should.
1.33 or whatever that
One point annual
1 point annual maybe 1 point
will be above 1.
5 or something.
Will be
above.
above 1. That
Yeah.
is for sure.
Dividend.
दे दिया तो दे तो
Yeah.
दिया
दिया
0.48
25
4.8% कर दिया ना. We did more than last year. We are taking care of that also. Yeah, please.
Okay, sir. Thank you, sir.
From ninth row.
Our government of India holds 98%. So is my intuition or instinct telling me, will it go down below 75%? We are in the 75th year.
That's a question answer. You also know it is not practically, it is really difficult.
Yeah.
So what we are doing in these circumstances, I think there are some banks where above 90% shareholding is still there. What we are trying to do is trying to send a signal of trying to mop up some small 250 crores of maybe equity dilution and raise capital for the current year. I have already declared that the internal approvals are in place, and we are waiting as the government gives us the nod. We really go to the market and think about it. The timing we'll see. So, of course, as you see, we like to convey to every stakeholder that though small, after a lot of capital infusion for the last 2 years, the bank is now in a position to garner some capital on its own.
Yes.
And that is a perception which needs to be sent to all stakeholders. Though small, we are beautiful. So like that, we are thinking like that. So we will try to, once we get the approvals in place and the processes goes on, we have the approvals are for combo, whether equity or AT1 bonds. But primarily we are looking to dilute equity. So whatever small percentage we can shed from here, and then that's an industry issue of 75% by, it is up to August 24. So we'll wait for that time, whatever call is taken by the majority stakeholder.
Thank you and all the best. Thank you.
Hello, sir. On this shareholding only here. Yes, sir. On this shareholding, sir, I can see only 1% is outstanding, right, in the market.
Yeah.
So that 230 crore of pool deciding the market cap of the company, is it? What is the history behind? I was not aware about such a high shareholding earlier.
We had when things were going tough for all public sector banks, everyone got share of their capital. So we were not an outlier there. Yes, we got 2 years of back-to-back 10,500 crores. That is what has made it 98.25.
Okay, sir. Thank you.
But the good part is my share price is going.
From 70 rupees, the share went to 42.5.
Yes.
Because less liquidity, we all promoted the bank.
Thank you.
Every one of us, and the liquidity was very small.
Correct.
And everybody was chasing the share and went up to 42.5.
Yeah. So I know I now know the history behind that.
So that is why this time he has kept the meeting here in a much better location and better this thing, and with a good attendance.
It's a good, yeah. Though we are, see our returns, if you see, come in one area where we are better than the peer group is in terms of our share price. If you may look my smaller PSBs, or we are better than them. So we are at least some way positive than the peer group.
And so this 10,500 crore infusion came which year?
2021 and 21-22.
Okay. Thank you.
It was 5,500 plus 4,600.
And 4,000.
4,600. That was the breakup.
Prior to that, what was the capital of Government of India? And what was the...
Kitna tha, anybody knows about this? Date exact percentage, we share with you separately.
Okay, sir. Thank you.
Yeah. We got the recap bonds in that. Yeah. अजय सर आज मेरे साथ बहुत प्रिपेयर होके आए हैं. Any other question we can still answer? Anything, any doubts? Choksi sahab, anything from your side, from your desk? Huh? Sir, so just ask, yeah.
Either compliment, sir, and in fact, the way you are increasing now the business and because you set up even Mumbai, last year only you brought the FGM over here.
Yes.
Still continuing now.
Yeah.
You brought the JDM also and you put the branch head also.
Yes. So
The main hub, for the business and you are going out of your area.
yes. Yes.
But
That is the messaging we want to show, that now we are going out of our core areas and particularly if I'm not visible in Bombay, where should I be visible? I should be visible. थोड़ा सा sound. I told you the perception what I am working. I don't at 17.10, frankly, you are right, Mr. Choksi. At 17.10, I'm pretty okay.
Yeah, so you don't need, and your profit for the current year would even drive growth for next year at this perception. So,
But also to some extent, though small, the ECL hangover is there, which is going to be somehow coming very shortly at some form or the other.
as Mr. Ajmer has taken a lot of credit for the stock price, I would give one more suggestion to him. You should convince the government to take back the money from you to reduce the capital.
Yeah.
So because you all continue to inspire us, we will be growing more
Yeah.
than 15%.
Yeah. And actually such gatherings really inspire us, to be frank, Mr. Ajmera, for a bank of our size, for a bank of our visibility, coming to Bombay and having such August gathering here, it really inspires us.
From a very big bank like Punjab National Bank here, the whole factory person Bank of
Yeah.
Here the Bank of India. So you already have the wealth of experience.
Correct. Correct.
Raghavendra was PMO.
Yes.
So you use the word one factory.
Yeah, I know. That's why he's driving all this co-lending, back office. He's driving all that. So these are the best practices of good banks that we are bringing in here. Maybe we need a bit of a stable phase and then we can leave from. So, yeah. Okay. Thank you very much. Thank you all. Yeah, please. Just some closing remarks, please.
As presented by MD sir and discussed with you all, the year 22-23 has been a great year for the bank. The bank has taken many new initiatives which will continue to transformative journey of the bank. I extend our sincere thanks to this elite gathering to come to this place and interact with us. I am sure that the guidance given by the bank will certainly be met, and the current financial year 22-23, we will show better results. Thank you. Now I request, yeah, sir. Yeah, 23-24 will be a good year. And now I request everyone to join us for high tea. No, sir, you will not. Yes, sir.
And we are the release community. And we come to be there.